development, we can inform the bidding engine and the overall technology to create a better value proposition to the existing customers as well as new customers for the business unit.
So Andrew, how does it fit in with the overall strategy of what you're trying to do, which is get more people paying for bigger gaming hits on your platform?
Sure. So to remind everyone, Skillz is a company focused on building the future of competition on the internet. We see this as building the gamification of things, or GOT. And when we think about the investment in our business and where we're growing, we're really investing in 4 different areas: in content, in distribution, in international expansion, and in brand integration. By making the Arky acquisition, we're going to be able to accelerate our ability to help all of our developer partners distribute their content better than ever, actually.
Andrew, we had some debate about this over the last couple of days, in fact, as it related to Twitter. But how do you see the balance, short-term and long-term, between monetizing your products via advertising versus subscription, and offering perhaps alternatives to those that want to face zero commercials but are happy to pay?
So we've talked a few times about our interest in building out brand-sponsored competition. If you look at Skillz P&L for 2020, we generated $1.6 billion in GMV, or gross. We spent $1.3 billion on prize pools, and we think that cost can be optimized down to increase the overall take rate for the platform. And we've been able to show continuous improvement and proof points against that as we've been growing the business. The integration of Arky into Skillz will actually help us accelerate our work with the brands out there that are interested in engaging with the consumer where they are, which is really on mobile.
Andrew, your stock has been a roller coaster ride, and when I was digging into this name before the show, there's still so much skepticism out there about what you're trying to do, whether it's on the reopening and the fact that people are leaving and they're not going to be gaming as much, to questions about the CFO leaving so soon after becoming a public company, to how many hits you can actually have. Is there a disconnect? Do you think that there's something that Wall Street is not understanding about your stock, which is making it such a battleground?
Yeah, I think there's been a bit of a SPAC craze. We were early on in partnering with a SPAC to go public as a kind of a non-traditional route. And I think we've been caught up in that to some extent. If you actually look at the performance of our stock since IPO, we're up over 100%.